David Rubenstein, Jeremy Grantham. I know Jeremy for ages. I have huge respect for him, and his philanthropy speaks volumes. In your conversation with Mr. Grantham, how did you address the 3-year, the 4-year caution he's had on the American financial experiment?
For those who don't know, Jeremy Grantham is a man who is a very distinguished an analyst, financial analyst, and he's been quite prescient in predicting bubbles bursting, and he's really good at that. And he's predicted many bubbles that actually subsequently burst. As a result, he's got a really terrific record as an investor. But now he's spending most of his time investing in climate change and climate tech. He thinks the greatest challenge in the world now is the climate problem we have. So most of his money is in a foundation that goes towards that. But he likes to call bubbles, and he's said maybe artificial intelligence is a mini bubble. But we're now coming out of the tech bubble, and that tech bubble he forecast, and he was not involved in tech, and therefore he did pretty well for his investors. He built GMO many years ago. He's a British citizen initially, but lived in the United States after Harvard Business School, and he built one of the better money management firms in the Boston area, and he's quite well known for his philanthropy, but also for predicting bubbles. And he also says the Fed is almost always wrong in predicting recessions. The Fed is not predicting recession now, but he thinks we will have a recession for sure.
Does he think that it's harder to see a bubble now than in the past? Is it more difficult to spot bubbles in an era where people have been grown up, have been raised through the financial crisis and through the Big Short and all the glory around bubbles?
Well, you don't really know you're in a bubble till it bursts, typically. And he's actually pretty good at predicting bubbles, but nobody's perfect at it. And the reason we have bubbles, he would say, is that there's the phenomenon that everybody is afraid that their neighbor's going to get rich and they're going to miss out on it. So they pile in when things keep going up, and ultimately, in a burst, they're disappointed. Pointed out, for example, Sir Isaac Newton, one of the smartest men ever, he got into an investment, thought it was pretty good, doubled his money, got out, and then he saw it kept going up and up. So he mortgaged his house, took all of his money, put it back in, and he lost at everything. He went bankrupt.
Physics and market timing maybe don't go exactly together all the time. I'll just say that.
Right.
But there is this question going forward, especially at a time where people are trying to game out where the Fed is, of just the cross currents and the uncertainties and how much the U.S. can continue to diverge from other places. Does he seem to think that that's overplayed based on the AI bet, that sort of people are not looking at history and that they need to more to really understand this?
Well, I think looking at history would be something he thinks is a good idea, because if you look at history, you'll see that when you have these kind of inflated bubbles, inevitably they're going to burst. And so we've had many bursts. The dot-com bubble is where he really made his name, because he was in effect predicting that would happen in 1998, 1999, and 2000, and his firm did quite well avoiding the tech bubble that existed then. He's actually a legendarily smart person about predicting follies of the markets, and he's not afraid of telling you that you're not smart, you're stupid, you're doing something wrong. He's not afraid of actually going against the conventional wisdom. Very often people don't want to offend other people by telling them they're not that smart, but he's willing to say, you're wrong about this.
But this is why this conversation is so important, folks. 9 p.m. tonight, Rubenstein, Grantham. David, you're one of the congenital optimists out there. You have put money where mouth is on the artifacts, the heritage of the American financial experiment, the Magna Carta purchase that you made, and the others. I'm not going to say you're the polar opposite of Mr. Grantham, but there's a built-in Rubenstein optimism. Do you maintain that, even with not perma-bear, but the perpetual caution that we witness with Jeremy Grantham?
Well, he's much more bearish and much more negative on things than I am personality-wise, probably. But, you know, that takes a lot of courage. When you're telling people they're wrong all the time, that's not easy to do. So I am probably not as good at telling people they're wrong to their face as he is. But he's willing to tell people, you're wrong, and you're making a big mistake.
All of us rocked by the climate change stories of the summer, this, that, the other thing. What is his prescription to have America address facts of climate change?
Well, he thinks we're not doing enough, for sure. Now, he can't solve all that problem himself, but what he's doing is he's taking most of his money now and investing it in green tech companies, venture capital kind of companies, small ones, hoping that one thing will come along that will actually make a big difference. But he's not trying to influence our government policy by going down and lobbying. He's past that. But he's actually a very, very clever person who now has made his main focus in life climate tech, and investing in things that are going to maybe help with climate.
You've said several times he's not afraid to tell people to their face that they're wrong. Has he said that to you?
Well, he hasn't said to me I'm wrong, but necessarily. But I think generally, when you're predicting people, or you're predicting bubbles are going to burst, you're telling people, 90% of the people, they're wrong. And he's not afraid of telling people they're wrong. You got to have a certain kind of personality. Probably he's better at it than I would be.
The idea of investing in niche companies, sort of what Tom was talking about, whether it's climate change or whether it's some of the venture capital that other people are doing, is that a more sure bet from your point of view now at a time where there is such a high degree of uncertainty on a macro level?
Well, on climate tech?
Or just in general, broadly, like this sort of niche concept of just going at things very specifically with a smaller pool of money. Is that a sure bet to make bigger returns?
There's no sure bets anywhere, of course. I think the biggest concern that I would have is that we're not quite past the point where we know there's not going to be a recession. I don't think we will have a recession, but nobody knows for certain. You don't know it until you get into it. Right now, the conventional wisdom in Washington is that we've gone past the likelihood of a recession. And there are some people like Jeremy Grantham who thinks that we may have a recession, but it may be next year, not this year. As you know, there was a prediction of a hard landing, maybe by the end of this year, but now most people would say probably not going to have a hard landing by the end of this year. But as the next year, that's when Jeremy Grantham thinks there will be a recession sometimes next year. And again, predicting recessions is a fool's errand. It's very difficult to do.